You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to Perth Property Show. My name's Trent, Fleskens, your host. As always, what an exciting year 2025 is already turning out to be. We're seeing early signs that activity in the Perth market has already been running above trend, and we're only walking into the third week of the year. I can't wait to see what February, March period looks like, which is always a popper in Western Australia, or at least has been since the start of COVID when the world changed. This week I thought I would take a step away from the market for a week and take stock, have a look at the setup we've all got as investors, as developers, as renovators, and make sure that everyone, if they can be, on the best even playing field as possible. Or at least all the guys and girls listening to this podcast, let's make sure we're all up to speed with our tools, with our technology. So as a community, we've got the best chance to not only identify the property we're looking to find, but also mitigate as many risks as possible from a financial, from a planning, from a spatial side of things, so that we can understand what we can pay, what we can offer for that property, and then what we're expecting to need in a cash flow perspective along that investment journey across any of those strategies I've spoken about, so that when we come at the end of this project, whatever it is, a hold, a development, a reno, there are as few surprises on the downside as possible. So today's topic is just me. It'll be a quick one, and it'll be a run through the 5 essential tools, portals, software programs that I've used going through the early stages of my career that most people, I think, financially should be able to support either subscribing to or understand using. And I'll also reference a couple of tools that are a bit more on the expertise side that cost quite a bit more money. You can make a decision as to where you sit as an investor on your journey in the West Australian property market. So we'll crack on with the first one. This one is one that not many people will be surprised about, but I want to talk about a few of the features that I think are the ones you should be using, or at least how you could be using them. And that's RP Data. If you don't have RP Data Professional and you're serious about property investment, property development, subdivisions, renovations, then you're really missing out here. Yes, there is a cost to it, a subscription cost of around a couple $100 a month. But when you think about the risk mitigation that couple of $1,000s a year is going to provide you, as well as opening up the opportunities that most punters on the street have no idea about, this one is easily one of the best financial investments you'll make in yourself, in your property investment journey. If you are serious about being in property, if you are listening to this podcast every week and have done so for years, then I would implore you and ask you the question, why are you not investing in the proper tools? The first one being RP Data. And these are the ways that I use RP Data and have done for a decade now. As many would know if they've used the software, or maybe they've just ordered a few bespoke reports every now and again, it's got a lot of power. It's not the cleanest set of data. There's some dirty data in there in terms of some information that's just not right or not up to date. But for the most part, the things that we need to know certainly are handy. And I'll run through those now. So the first way that I like to use this software is essentially as a mapping tool. There are many ways we can first identify a property. Google Maps is obviously a free and quick way to search a property in a street and understand what properties are around. But the drawback to Google Maps is it's generally 1 to 5 years old in terms of the satellite photo, and therefore you're going to be really behind the 8 ball when it comes to what's going on in the street, interfaces with boundaries. And also it's not entirely accurate in terms of where things sit as well, given the curvature of the earth. So there are some factors there that provide some risk if you're just using Google Maps like most people. RP Data steps it up. It uses enhanced technology. I believe it might even be near maps photography that gives you far more up-to-date images. Not as up-to-date as they could be as other software, but far more up-to-date. And for property purposes, your 80-20 rule certainly applies here. And so first off, what you're doing is you're able to use that mapping software to be able to essentially click around. Let's say you've identified a property from driving the streets. You've then gone on Google Maps. You can then go on RP Data to understand a couple of things. 1, dimensions of properties. 2, who owns that property. And 3, by clicking around, who owns all the properties around you. If you're trying to avoid, for example, state housing across the road or next to you or behind you, this is an easier way to identify that, because as you click on every property, you can see who owns that property. You can generally also see what they paid for it. So that will help with that strategy as well. If you're looking to buy a property off market, or you see a property on market and want to know what they paid for it to see what their pressure points are financially as a seller, understanding who bought it and what they paid for it is important. You can then start to go down a rabbit hole with this information. You can see when they bought it, and by clicking on their name, name, you can then see what else they own, what else they have owned. You can get an understanding of how sophisticated this owner is, whether they know what they're doing in property or whether they may just be a mum and dad looking to trade it in and out, how long they've owned it for, and as I said before, if they had any pressure points, if they paid $600,000 for that apartment in 2014 and it's on the market as offers, they're probably going to want their money back. You can get a leg up there straight away when it comes to seller expectations. You can then go further, and as much as you can be a bit of a voyeur here, looking at friends and family and celebrities and looking up people's names about who owns what just for fun, that's not going to help much in your property investment journey. But you can certainly start to then act as your own buyer's agent in a way by scraping data off of RP data through generating reports on all the properties that may be, for example, zoned R30 or 40 or 60 in a suburb. You should then have access to a list of all those properties, and you can create yourself a bit of a to-do list on providing notes in the mailbox, for example, to specific owners of households that you might be interested in. You can figure out, for example, if that property has been for rent before, and if it has, it's probably still for rent, and you may not be able to access the owner through that property. You, however, may be able to access the owner through a property that they own that is not that property by looking into their details. So there's many ways that you can be a bit of a private investigator through RP data, trying to essentially find a way to contact owners of specific properties you've identified, and then on a more broad scale, create lists of properties that fit certain parameters. That might be land, square meter size. I want to look for every property in Westminster that's between 720 and 820 square meters. That would help you find, for example, a development site and not a bunch of units that have already been developed. You may be looking, for example, at certain zonings or certain dwelling types. You can then, for example, do a radius search. So I'm going to pick a property in the middle of a suburb and do a radius search within 2 kilometers and get a list of every property within a certain radius in the suburb and maybe outside the suburb as well. So depending on how you're looking, it may be on a zoning, it may be on land size, it may be a certain price level, it may be the last time that property has sold and making an assumption that maybe people will be ready to sell after 10 years, for example. You can use RP data to identify properties and the people that own them and what they paid for it for all of these needs. And that's something that I have done for many years now in trying to understand motivations and simply as contact details of property. So if you are there, you see yourself as more than just a punter, but maybe not a professional, this is a software, RP data, that you need to pay for to invest in, but it certainly can give you a lot more information available than simply typing in the property's address and hoping that Domain or a bank or Homely or one of those websites gives you an understanding of valuations. And that's what leads me to my next point on RP data. The algorithms on values are generally the best that I've seen. Now, are they entirely accurate? No. They'll give you a banding from the lower quartile to the higher quartile and then a best guess in the middle. But every property that has enough data, which I'd say is 95% of the properties available in Western Australia, RP data will give you a guess as to what they're worth. Normally, let's say if that property that they're giving you that banding of $550,000 to $650,000 and they're guessing at 600 grand, in a market where it's rising, they're generally a bit behind the time because they're using data from 2, 3, 4 months old. And so what you would do is say, well, most likely in a market that's rising by 1 or 2% a month, I'm going to be at the top end of that banding. So you would start to set your expectations based on the higher side of that banding because the data is inherently going to be a bit behind. And inversely, if the market's dropping, you can understand then maybe I'm behind the 8 ball on what's happening in dropping values and I may be able to pitch it on a low side. But certainly anyone looking to buy right now in Perth, getting an automatic valuation through RP data or any of these third-party sites should be pegging at the high side of what those bandings look like. So what you can do here is really start to form a view of all of your risk points, because not only are you understanding the vital title information of the property you're looking at, you can do the same thing for all the neighbors around you and start to really gather some socio-demographic and socio-economic understanding. You can see where there is density, where there is not. You may want density as examples of what you could do in the property yourself. You may not want density because you want to be in a quiet street and buy a house for yourself. This information is pretty hard to garner in an efficient way without RP data. So my first pick, RP data. Many things you can do with it, but certainly those are the ways that I have used it in the past. The second one, which is more important for developers, for subdividers especially, is a free resource called Dial Before You Dig. If you haven't used Dial Before You Dig before, it's something that's freely available to everyone. The government provides it to you. And what it is essentially a search function with a mapping system. You type in the address that you're looking to understand, and this is really set up for a lot of people in construction and earthworks to ensure they don't hit vital services and endanger themselves and others. There's a service called Dial Before You Dig. You type in the address you're looking at, and within really 20 to 30 minutes, sometimes within 2 minutes, they'll give you reports back from all the services entities like Western Power, Water Corporation, like Telstra, NBN Co, Atco Gas, where all your services are. Now, this is super important for a developer, because if you're looking to build on top of land, if you're looking to subdivide land, understanding where the power is and where the sewer is and where the water is, and if there's any power, sewer, or water in the first place, is actually very important because it determines whether you can fit a driveway down the side of that property, whether there there be enough space to put a single story unit at the back without having to build over sewer line? All these risks mean you may not be able to develop in the first place, or that if you can, it will cost you significantly more than you would have budgeted for to move services or build around them. So dial before you dig. Any property you want, it's free. You can do as many as you want. All you need to do is register an account, and it'll provide you a static PDF of the infrastructure around that property so that you can use that information to understand what restrictions really exist on that property from a development point of view. Okay, next one is a thing called EasyNet. Now, EasyNet is a water corporation mapping system. It's a dynamic mapping system in that you can scroll around it just like Google Maps, really. But what they've done is they've added a layer on top of Google Maps that tell you exactly where all the sewer and water is. Then you'll say, well, Trent, what about dial before you dig? That does that too. They provide a static map, a PDF A4 of where the sewer is at that point in time. But if you're getting really detailed into whether you can do subdivisions or not, the next thing you really need to understand is how deep is that sewer, because the depth of the sewer will define how far you need to be set back from that sewer as well as the direction of where the sewer is coming from. It really is quite an informative tool. Is EasyNet, ESINET with Water Corp. You can get yourself an account with them as well. And that starts to give you that deeper level of information around essentially the sewer and water infrastructure available. Unfortunately, there's nothing like that for the punter for Western Power, and that will be really helpful. Electrical engineers have access to that level of detail, but it's currently not being shared by Western Power with the rest of us in a dynamic way, at least. But for most people looking to understand what's around them from a more basic investment and subdivision point of view, the dial before you dig and EasyNet services certainly will suffice. Number 4 is Intramaps. Now, we've spoken about Intramaps a number of times on the podcast over the years, not so much in the last couple of years as we've covered this in the early years of the show. And I would use this as an opportunity to implore everyone to look back at our earlier episodes on subdivision, on renovation, on development. All of those episodes are still very relevant today. Do a little search in Spotify or Apple Podcasts for some of those keywords. But Intramaps is a mapping service that really focuses on providing every local government an opportunity for them to tell you where all the different zoning is in their local government area. So they'll have a Google Maps system as a baseline, and then they'll add layers on top of that for various planning reasons. But the one that you want to be interested in as a developer especially, as a subdivider especially, is essentially the planning layer, and that will generally break down again into different zones. They're all different based on the way that the local governments use it. But what it will do for you is provide you a spatial mapping version of what's a bit more clunky in RP data, and that's essentially a layer that has different colors for all the different zones within the local government area. Now, you can use that to start to really pinpoint where you would like to try and go back to RP data and hunt for properties. So you can see, well, there's a little pocket of R40 that sits in Melville or Booragoon or Bayswater, but it's not across the whole suburb, it's just in this little area. I'm going to then go to RP data and start to fish out the contact information, title information of all those properties in those pockets. Intramaps is really good for being able to confirm what the zoning is and target specific properties with that zoning back on RP data. Every council in the Perth metro area pretty much uses a system like this. You just have to type in the name of the council and then Intramaps into Google, and you'll then be able to use that mapping service to your heart's content, identifying properties with the zoning that you're interested in. And finally, and this is relevant for passive investors, renovators, subdividers, developers alike, you need something to be able to do your numbers properly. And I know a lot of people will start off with maybe an Excel spreadsheet, hopefully something more than the back of the envelope. When you start to get a bit more sophisticated, you start to have to really factor in things like interest payments, GST, selling fees, all those things that most people probably forget from the front end when they're doing their fees and wonder why they didn't make as much at the back end when they sell. The easiest program to use, the most basic program that I think covers 90% of the uses you would need as a property developer until you really start to get into big apartment developments, is a program called Fees Study. So it's FEAS for feasibility and then TUDY, so Fees Study. This is a program that I believe was built by a fella in South Australia. I think he still manages it. Costs around $1,000 as I understand it. And it's a really basic and easy way to navigate both passive and active property investment strategies. And again, you can do it for any type of investment. And the cool thing is it really lets you set up between a number of different financial situations. So you can have different equity stakes, you can have joint ventures, you can have more than one loan, you can turn GST on and off. It assumes all your rates and taxes. It does a really good job at giving you a pretty accurate forecast on what you should be expecting as a profit, and then breaking down some analytics around margin on development costs, internal rate of return, your total development costs, how much debt you're going to need. It's a really simple but effective way to do your feasibility studies. It's something that you can buy once And if you don't want to update it, you don't need to update it. You can keep using it. But to be able to use that for the rest of your life as a small scale investor who just wants to make sure they're getting the numbers right, I highly recommend this program. And to this day, I still use this program for a number of development types that we have in the business, simply because it's easy, it's really hard to stuff up, and most importantly, it's quick and accurate. What I want to be doing at Strategic is identifying costs, risks, and opportunities as fast as possible, because if I'm looking at a property and it's a good one and it's one that I think is going to make my business a lot of money, it's probably one that other people are looking at too. And the quicker I can identify all of those risks and opportunities, the quicker I can act. For the most part, action is 90% of success. So for feasibility studies, something that people have asked me a number of times offline, this is the program I use. Guys, those are the 5 key tools that I would recommend for people just starting out in the industry. Invest in it. Pay the money, invest in yourself, invest in your tools. Just like a tradie investing in great quality products, you need to do the same thing as a property investor. Now, are there a couple of other programs that are higher level that cost a lot more money? Certainly. We've spoken to the guys at MNG Access before. That's next level information that consolidates most of the tools I've told you about today and provides it in a much more detailed environment. That subscription, however, will cost you many thousands of dollars a year. There's also a program like Gap Maps, for example, which is a demographics tool. It will tell you where all the fast food joints in the country are and what brands they are, where all the gyms are, where all the childcare centers are. This starts to get really detailed about demographics and competition, territory saturation, but for the most part, that's not relevant to people who are going to be looking at just managing their own residential invest portfolio, and it costs tens of thousands of dollars a year. I guess what I'm trying to explain to people is that competitive edge, that thing that gives people confidence to pay that extra $10,000 or buy that property off market, and you wondered, how the hell did I miss that? You didn't miss it. It's just you never knew the opportunity existed in the first place. And to be able to identify and mitigate and quantify those opportunities, you need to be able to have that competitive edge and use the right tools and pay for them. So for all those guys who are great friends and acquaintances of mine these days who listen to this podcast, these are the tools that I would recommend, that if you're serious about making a difference in your financial future, just enjoying your property game and being ahead of the pack, start to get ahead with the right tools. RP Data, Dial Before You Dig, EasyNet, Intramaps, Fee Study. If you get those 5 and you're using them on a daily basis, you should be right. Guys, next week we'll have Brendan Ptolemy back in the studio for his quarterly update on the market. I can't wait to have a chat with him about what I think will be the most exciting year in property in Western Australia in this decade so far. I'll speak to you next week.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!